Okay, these next series of questions are on this whole outturn and fixed budgets, fixed price budgets. So what I just had to do was really just do them on a spreadsheet because it was just so much, well, not so much calculation, but one had to do it. This was really the only way to get round to make sure that I sort of got this correct, so to speak, on the system. So I'm at question 121. I'm going to record 121 to 125 or whatever and stop. So let's look at 121. Please look at the question. Look at the, here is the question. So here, question, yes, so question 121, yes, looks like this. So it says that this is prepared, they prepare a budget on an incremental basis. So whenever you see outturn, just treat it like straight. We're calculating the increases when we see them, and putting in any sort of plans. This is very your normal style budgeting. When we come to the fixed price, that's typically what happens in England within, for example, our National Health Service or our public sector. So that's quite unique. But otherwise, most budgets will take into account all expectations and what we're working with. And that's the outturn method. It's also referred to as the cash method. So this is pretty much saying that, okay, by the way, a public museum's got this thing. This is their financial year, April to March. This is their current situation, and these things are going to increase. Salaries will increase by 3% on the 1st of July. Premises will increase by 2%. Supplies will increase. Central charges won't, and income will increase by 10%. So let's sort of see how they work this. So I think it's important to really be careful with this. So that's the 60,500 for salaries, and that's the increase. But if you look at carefully, it says here, so what I've done carefully is to show you that it said we're going to have an increase of 3%, but it says on the 1st of July. So the year begins in April, but the salary increase comes in on the 1st of July. So that's for 9 months. So that's really important you get that right, that you don't put in a full year of increase, you only put in the 9 months. Then, of course, we're told that straight away this will be straight 2% for the whole year, straight 2% for the whole year, straight 2% for the whole year. There will be no change to central charges, and income will increase. I'm sorry, that's the expense. Income will increase. 8,500 will increase by a whole 10%. So, in effect, what you see me doing here is adding all my expenses now. Technically, I mean, this really shouldn't be there. Really, this, if I add all this together, these are my own new adjusted expense I should have in there, and if I subtract, well, of course, I mean, I've already done it for you. If I subtract this minus this income, well, I get the 91,463, which takes me to answer B in the kit. Yes, so to answer B in the kit, right? So that's B. This is the correct answer. So that's how you deal with this. So be very careful with the months. That's, I think, the important thing to watch out for with the months. So the answer there, 121, is B. Okay, let's go to 122. So 122, I'm sure you've read this before you come along to watch the video. So, and I've done, like I said, I've been doing these on spreadsheets because I want to make sure I get it. So you just have to be really careful. So look at 122. So 122 says that they run their budget from the 1st of April to the 31st of March. I've drawn all the months out. And it says that a budget for 15,000 for building maintenance. Yeah, so this is the profiled budget. So profiled budget just pretty much says, let's see what happens month to month. Let's just break it up and see what's happening month to month. So that's the profiled budget. Break everything month to month, and then let's see. So it says that we have a budget of 15,000 for maintenance. 3 is for repairs. So this, technically, I should really include a column here, insert, and call this repairs. So profiling pretty much means break it up month to month. And this is for reactive repairs. So this is reactive. This is regular repairs. And the 3,000 is just repairs to the roof repairs. Roof. That's what's going on over there. Roof repairs. So So that's what we're having here. We have this. So it says the 3,000 and then 12,000 is expected to be incurred evenly through the month. So you kind of have that, and you can see that's that 1,000 happening through the month. So it says, what would the profile building maintenance be by the end of September? So by the end of September, that's kind of everything from April all the way to September. And if you add all that together, you will get 9,000. Right, so that's 6 over there plus 3, and then you get a total of 9,000. So your answer, so that's what profile budgets are. I mean, read it up again, but it's very much about break up the budget pretty much. Tell us what's seen month by month, and they'll ask you a question, what's happening in a particular month, right? And that's how you deal with that. So let's go to the question, and we can see that that question again. And when you do that, you should get 9,000, right? So you need to literally break it up to see what's going on. Okay, question 124. Again, another profiled question. Pause, read the question, make sure you're happy with it, so that before I jump into the answer. 124. So what do we have with 124? Yeah, I think I'm actually slightly out here, and I can't find why. It might be my calculation, but I'm close enough to the answer. So it says here that a public library does April to March. Then it says that, because make sure you compare your answer with mine. It says that it does different things to the different costs. So let's start off with premises. Premises, it tells us that premises will be collected quarterly in April, July, October, and January, and I've done that. Then it says that supplies, I'm going with supplies, includes a 4,000 payment that will be made in June. I put that in June, and the remainder will be profiled on a straight line basis. So pretty much, if you add all this together, all this, that's the 10,000. So I split basically 6,000 in 11 months, and that's the 4,000. I've done that. Then it says transport is just straight split throughout the whole year. When you do that, I get 16,500 if you do that as well. And then in terms of salaries, same thing, split evenly throughout the whole year, and I get 71,500. Then so yes, then there's depreciation, and I split that as well. So depreciation is 8,000, and I split that over the period. I'm just trying to see if there's anything I'm missing, because when I look at my answer, because the question says what would be the profile budget for April B, and my profile budget, when I do just for April, I get let's take a sum here. Oops, sorry. Let's do the sum here, and I'll just do enter, and I get 11,545. I'm £45 slightly over. The answer is B, 11,500. I'm just wondering what the 45 is. I feel like I've missed just a little calculation somewhere, but I can't find it. So I would have put B anyway. But this is the standard way to do this. Just break up these costs monthly, and then just answer the question for up to the period they're asking for. They're only asking for April, and this is the profiled, if you like, expenditure cost. Okay, great. So that's 124. The answer is B. Yes, 11,500. That's the answer. I'll just take you to the question quickly. And the question, here we are, 11,000. Yes, 11,500. That's the answer there. Okay, great. And then finally, in this section, question 125. So, yeah, this one again. It's just being very careful. But you'll see it. Oh yes, this was a long one. Now, what I'll say for this one is that this is one of those that you'll need time in the exam to do if you get. So you just have to really be careful. So I'm going to do this one and just show you. So please read the question before you start looking at my answers, because it's just because of time. Key point here is that you're selling on credit, and you're receiving money at several steps. That's all. You just have to be really wary of how you record it. So because I'm an accountant, I guess, I'm just going to use the old sort of classic accounting tool. You could do this manually, of course, but I just want to sort of show you how this would work. The key point here is that it says that in month one that you sell for 150. So I hope you can see it. And it says there very clearly that 90% of these sales are on credit. So 10% of these sales you get the cash back. So I'm going to color these as soon as I finish talking about them. So he says you get the cash straight away for 10%. That's the 15,000 I get straight away. You literally have to do all 3 months, I think. I don't think you can get to month 3 without maybe missing something else. You have to be really careful. I mean, you probably can, but I'm just doing the full thing in just so you can see everything. So we have 15,000. That's because it says you get 10% straight away in cash. The other 90% is on credit, and that's that over there. So that's that 90% on credit that we've dealt with. And then it says that you will receive 80% of that, if you like, after giving a 5% discount of what you would have received. So 80% of this thing is pretty much 108,000. If I add these two things together, it's 108,000. But you give a discount of 5% off this. So you only actually receive 102,600. That's what you actually receive. And I put that in the bank as well. But I've also recorded the discount allowed. You don't get the discount. You've forgone the discount. You've let it go. So this person has paid you 102,600 and you've given them a discount of 5,400. Then let's look at what happens the following month. The rule says that 1 month later, so I've dealt with that, that's month 1. It says 1 month later, you will receive, if you like, 15% of this thing, if you like, right? Because it says you get 80% in month 1. It says you get 15% in month 2. So here I am in month 2. Here's that 15% that I'm getting. That's 15% of the rest of month 1. 15%, very clear. Then now let's look at month 2. What happens? It says that you sell on credit for 200,000. You will get 10% of that cash straight away for month 2. And again, 80% of, if you like, what you sold on credit, you will get less 5%. So that 80% of course, 80% of 180,000 is 144,000, but you give 5% off as a discount. You let that go, 5%. You're not going to get that. So all you get is 136,000 in your bank. There it is, in your bank. And you let go the 7,200 discount allowed. You let that happen. You let that go. That's gone. Okay, great. And then in month 3, you get the remaining 5% from month 1. It tells us that you get 2 months later, you get 5%. That's the 5% you get. First things first. Then you will get 15% of month 2. So that's, if you like, 15% of the 180,000. That's that over there. And then let's talk about month 3. So month 3, because you're selling 250, you get 10% cash because 90% is on credit. So, and then of that 90% on credit, you get 80% less the 5%. So the full 80% would have been 180, but you're only going to get that less 15%. So you're going to get that, and that's going to come into your bank. And that's the story of month 3. So what is this figure here? What do you get, which is what the question is asking. What is month 3? And that, if you like, is, sorry, I should do a sum equals to sum. Okay, yes, and I'm going to see if it will allow me to just pick all this up and just chuck in there. Yes, and that is equal to 229,750. It's just really sort of, you just have to really do it step by step, but at least you can follow what I'm doing. It's not difficult in itself. It's just that you have to be really careful as you're going along. Cool, great stuff. So that's question 121 to 125.